Good afternoon, everybody. Again, we are day two of the 60-day trading challenge. Just wanted to keep you updated, but today there was a lot, bit of a learning for the people who are interested or who are kind of a beginners who are not much experience. For them, the understanding and analyzing today's situation, the trade would be I would say the good learning if you are not accustomed to normal rule-based trading. So directly, let me get into the trade and the logic behind this. Like say morning in the morning, this is the first, again, I forgot to use the MIS order. We ended up creating the normal order, which is anyway, it doesn't matter much, but however, this is the order basically what we created it. And then as you see here, 9:30 is the time and we sold it at 85 80 is the price at which we sold the premium. So that 23,100 P and then we sold it at 85 rupees. And then as usual, we had a initial stop loss of about 128.70. And I'll show you to the chart. So we had a initial stop loss. Basically this is the initial stop loss, what we started with. And what is interesting or what's important to now understand here is we revise the stop loss twice. We call it as trailing stop loss. The moment it went, the trade went in our favor. The first revision happened over somewhere here. We revised the stop loss to whatever the value it was when the premium became half of what we had sold at around 42 point around say 43 rupees. Around 43 rupees was the when the premium came. The 43 multiplied by 1.5 was the first trailing stop loss. But then again, it went down to further. So then it went down to all the way down to roughly say for example 40 rupees. So the 40 rupees level, this is where we revise the further stop loss. So then multiplied by 1.5 times. So the 60 rupees became our stop loss. So it is way below anyway our entry price. And that is how we ensure that we are actually taking care of the stop loss and we try to ensure the profits are locked kind of a thing. So again, going back to the orders, we sold. See, there's a stop loss got hit, like the 60 rupees, as you see here again. The just the 60 rupees was it here. This is a stop loss order. Basically, the stop loss order got hit at around 154. Like say here 154 in this thing. But if you look at the closing price, we may feel, oh, it further went down. So 23,100, I think it would have closed if I go to the positions. 23,100, it closed to 37.95, way below the our stop loss price. So at 37.95, it closed. We closed it at 60 rupees. So we lost the opportunity, but that's okay. That's a discipline what we need to maintain over here. And then we ensured what if the market had gone opposite or no, in the exactly opposite to the after hitting our stop loss, it would have continued its journey on the upwards. Then we would have lost the entire money. So that is why the rule-based trading is quite important. So eventually we closed the trade at 60 rupees. 85.80 was our sold price, and then we closed the trade at 60 rupees. And this is exactly is the thing. 85.80 is our selling price, and 60 is the thing. And then the trading cost again today we calculated, like I think it is here. So you see here 57.80 is the trading cost. So we deducting the trading cost, 1877 is the net profit today. And the important thing is confidence level. Yesterday we had put it as 5 and today it is 3. Why we were not so confident is basically the market has already from the last couple of days the market is continuously going up. So when PE sell trigger got in the morning as per our setup, this is got triggered. So we were bit uncomfortable to sell PE after 2, 3, or even 3, 4. The entire week, in fact, this week was a uptrend, but the last 2, 3 days were really trending days on the upside. So the we today being a weekend, we were you know our feeling was the market may reverse from here, so there can be some correction up, so we were actually, emotions were saying there could be small correction, and PE selling may not be a maybe a good idea, bad idea. So but we just stuck to the rules. We did not care about our emotions. We just said, like, our setup is saying that we need to sell the PE. So we just sold the PE. At the end of the day, it ended in the profit. So again, I'm not going to focus too much on the profit because we don't know at the end of the 60th day, we might end up even in the loss. I don't care about that part of it. So what's important is if we do consistently what the rules is, our experience is it ends up in the positive, no, it gives a positive result. So the positive results, what it gives and what it doesn't give, we will see at the end of the 60 trading days. The whole idea of doing this analysis and sharing the important point is more from a learning perspective. This can not necessarily, people start focusing on, oh, what is the strategy? So that's not, let's not right now talk about the strategy. We will see that we are sticking to the rule. So the rule is, like, again, we have as I explained, it's based on the modified opening range breakout, but it also takes care of it nullifies the volatility, and hence it's not necessary, like, but both the days it got triggered exactly at the 9:30 candle. That's 15 minutes candle closure, but it is not going to be the same all the days. So there could be, starting volatility if it is indicating a confusing state. We will not be taking, not necessarily that we will be taking, will be taking the trade at 9:30. It could be 9:45, it could be 10. Generally, we avoid taking the trades after 11 or 11:30. 11:30 is the rule, but I personally sometimes avoid taking the trades if it is getting triggered post 11 o'clock. But here, as we will be going exactly as per the rule, so till 11:30 will be our cutoff time in going forward. Any of the days, if it comes, the trigger comes before 11:30, we will still be taking. So that's all for now. So if you have any questions, comments, feel free to reach out to us, and you can also, make a comment in the YouTube, so that wherever possible, we'll try to answer those queries. So thank you for now and have a great weekend. See you next week. Bye bye.